another episode of the Apex Perspective podcast. Today, I have with me Ash Patel, who is currently a commercial real estate investor. Now, he started off his career as an IT manager, but he transitioned into becoming a real estate entrepreneur. But Ash, can you tell me a little bit more about your background from your perspective and how led you to real estate?
Yeah, probably similar to you, man. Strict immigrant parents had to major in computer information systems, according to them, because my older brother did it. Went through the paces, graduated from college, and had a 15-year IT career. Throughout those years, I always had a side hustle because I knew I didn't want to work for somebody forever. So I started one business after another. These were all essentially low or no cost startup businesses. And most of them failed, but I learned a tremendous amount through each of those. And it wasn't until 15 years into this career that I found commercial real estate by accident. It was my wife and I went to our CPA, as we did every year, and said, "Hey, what can we do to reduce taxes?" And this grumpy old guy was just like, "Nothing. If you make it, you pay it." And that was such a nonsense answer. So I figured buying real estate, I always heard that was a great way to get tax write offs. Bought the first property. It was a mixed use property, meaning there was retail on the first floor, apartments above. College kids, it was on a college campus.
Mhm.
And I saw where the college kids were adding wear and tear and destroying the apartments. The retail tenant is putting his own money into improving my
Mhm.
building. And that was a pivotal moment where I thought, why would anybody ever invest in residential when
Mhm.
if you invest in commercial, your tenants are business owners, they're more vested in the property, and they will improve it on their dime. So that changed my life, dropped everything I was doing, became a full time commercial real estate investor. And that was over 15 years ago.
Mhm. When I talk to most people who start in real estate, they purely start with residential. But what allowed you to want to pull the trigger on potential the mixed use?
Great question. It was a really dumb reason. So the first floor retail was a convenience store. Basically, it was a campus convenience store that just sold a ton of beer to college kids. And the operator had a year or two left on their lease. So I figured, okay, so after the lease expires, I could put somebody in there and get another stream of revenue from operating the store, right? Because they had no renewals left in their lease.
Mhm.
So I thought that'd be a great thing to do. In hindsight, that would have been really stupid. I mean, do I really want to go into the convenience store business, even though I'm Indian? Um, so we did not do that, but it exposed me to commercial real estate because
Mhm.
of that one reason. I thought I can get an additional stream of revenue. Otherwise, I would have followed the same epidemic that everybody else goes through. They buy a single family house, maybe a few, then they get a
Mhm.
duplex, a 4 unit, and maybe bigger apartments. And then they hit a pain point where it's overwhelming. And then they have to decide, do you want to invest resources in scale, hiring property managers, maintenance people, leasing people? Um, and that's what happens, right? People will start accumulating doors, single families, multifamilies. They'll hit some pain
Correct.
points and have to make a decision. There's a much better way. Just go into non residential commercial. And the excuses that I hear, too expensive, too difficult, too risky, none
Mhm.
of those are true. I can
Mhm.
find you a retail building for the same price as a single family house that cash flows way better and you have less responsibility, right?
Mhm.
So our tenants, we rarely hear from them. So we've got about $50 million of assets under management. I have a team of 2.5 people. That's it, and we self
Wow.
manage. We self manage probably 80% of our holdings. Yeah.
Right.
I mean, we don't need leasing people. We don't need maintenance people. We rarely ever hear from our tenants. Matter of fact, we actually prefer to go out on site, do site visits just so we can interact with our business owner tenants, right? See how they're doing, see what we can do to help them. It's the opposite in residential. You're cringing every time your phone rings, where we love hearing from our tenants, right? It doesn't happen often, but
Mhm.
it's these are other business owners. So it's a way more fulfilling,
So
yeah, way to invest in real estate.
So you were thinking long term from the start. How would this look like at scale if I went forward with residential, and how would it look like at scale with particularly non-residential commercial? So did you go full throttle on particularly commercial subsequently?
I did, but I wasn't thinking long term. I wasn't that
Okay.
smart. I was literally just thinking about the next deal.
Okay.
And throughout the process, I did end up buying a few more single family homes and
Hmm.
apartments, and those were all mistakes. It was
Hmm.
they were all just nightmares. It's I couldn't walk away from a great deal,
Hmm.
so I ended up buying houses and apartments, and it was just not worth the effort.
Hmm. So there's an interesting aspect of commercial real estate. I did some actual research for this podcast. What's unique about commercial is that there's different ways to add value to these kind of properties. It's the longer term leases, it's the higher credit tenants, and it's also potentially doing the renovations to the building. So from your perspective, how do you choose your tenants, and how do you go forward with the leases?
Another good question. You have to look at the individual property. So you have a great point in adding value. I'm going to give you an example of a strip center that we just sold. When we purchased it, it was predominantly mom and pop tenants. We had a couple national tenants in there, and then we had
Hmm.
some vacancy. In our
Hmm.
world, that is the perfect value add property. So over the 3.5 years that we owned it, we stabilized the property by filling vacancies. As
Hmm.
leases expired, we renewed with national tenants, right?
Hmm.
So we added a ton of value literally by signing documents. We had O'Reilly's Auto that took 37,000 square feet, which was a former furniture store space. So they
Hmm.
signed a 15-year lease for
Hmm.
37,000 square feet.
Excellent.
We didn't give them any build out money. They did a $2 million renovation all on their own to our building. That
Hmm.
one signature on that lease added $2 million of value,
Hmm.
right? And the
Exactly.
effort, like the effort perspective from our point was we negotiated a lease. It took several months to do that. And that was it. So just by spending time drafting a lease, negotiating it, and signing it, you can make millions of dollars.
Right. And that lease alone, I mean, you're installing a high credit tenant into the property. They're more stable for the end buyer. They're also signing a long-term lease. So these kind of tenants don't come to any kind of property. So what are the demographics that you specifically look for yourself of these kind of properties in terms of location?
Yeah, we don't care. A deal is a deal. Where you asked earlier, how do you find tenants or how do you get the right tenants? You have to look at the property, the demographics.
Hmm.
I've bought rural strip malls before, middle of nowhere, but it was such a great cash on cash return. I
Hmm.
knew I would never get a national tenant. It would be all local tenants. And I also
Hmm.
knew when I sold it, it's not going to be a buyer from the coast. It's going to be
Hmm.
somebody within 10, 15 miles that buys it, right? So
Right.
I know that my upside is somewhat limited because it's a local buyer.
Hmm.
So what has to happen for this deal to be effective is the cash flow has to be ridiculously high,
Right.
right? And that's
Right.
okay. Now, if you're buying something, you can buy something that's losing money if you know and you've got proven results and proven um, evidence that you are going to be able to add value. One of the ways
Hmm.
we do that is if there's a lot of vacancy in a property, during due diligence, we will start marketing it and we'll see what kind of response we get. Right. So
Hmm.
if just a simple ad on LoopNet or Crexy yields a lot of interest, you know you've got something.
Right. Right. And something else that's a very interesting point that I think would be really important to go over is about how you choose these kind of properties in terms of being diversified. As you know, commercial real estate is more susceptible to recessions. So do you focus on multi-tenant properties, or are you also open to single tenant properties?
I'm not a fan of single tenant properties because if your tenant leaves or doesn't renew their lease, you have some very expensive dirt. I'll give you an example. So if you look at a typical Tractor Supply, if they sign a brand new 15-year lease or if it's a new build, it's trading for 8.5, $10 million.
Mhm.
When you look online and find a Tractor Supply that only has 2 years left, it's trading at 3 million.
Right.
Right now, if Tractor Supply leaves, that building might be worth $1 million.
Mhm. It's
So
too risky
it is
because a single tenant means your cash flow goes to zero if they vacate. That's a
correct.
problem. Actually, negative. My apologies. Negative, actually. So
Yeah. What also happens, Arian, is a lot of these loans, the banks can call the loan if your national tenant leaves in a single tenant building. So
mhm,
the bank, the way they write their loan docs, they get to kick you while you're down.
mhm. Yeah. That's interesting. But the other thing that was also an important question here is there's always that debate between residential and commercial. The one being that residential succeeds even in a recession. So what would you say in regards to that specifically?
Okay. So let's think about residential in two different buckets, single family homes and apartments.
Hmm.
Right. Today, the average single family home in the US price is $420,000. And
Yeah.
then, the residential people will, well, we have this shortage of housing by 12 million units. No, we don't. We have a shortage of affordable housing, right? We have
Yeah.
plenty of
Yeah.
apartments in the pipeline. And apartments, let's talk about that. Phoenix is a great example. They had an epic rise, made a lot of millionaires in Phoenix because of multifamily investments. Right
Hmm.
now, if any of your listeners Google apartments in Phoenix, one in particular that's in a lot of trouble, Avondale Commons. It's it was a handful of apartment syndicators that got together, did this new build. They promised their investors 25% returns. Not promised, they projected, sorry.
Okay.
25% IRR. Well, 4 or 5 years after they took the first person's check and they raised $20 million, now they're raising another 12 million because they're out of money. And what's happening is those initial investors that put the money in, they did a
Hmm.
cash call from them already and then still said, okay, we're about to lose everything. So we're going to have to bring in preferential equity. But in order to do that, we have to put you guys in second position, meaning the new people will have to make a 16% IRR before you ever see a return. I just sat in on this webinar,
Wow.
right? I mean, it was
Wow.
horrendous. So rents, and so here are people, investors that put their hard-earned money into what should have been a slam dunk deal in
Sure.
multifamily.
Of course.
They have not gotten a return in 4 or 5 years. And now they're bringing new money in where their money is less valuable and they'll probably never see a return. Right.
Right. Right.
So even the new people, I don't know if they're going to see a return because the way it's just a bad deal. But nonetheless, this property has the nicest apartments I've ever seen anywhere. And their average rents, I think, are like $1,600 in Phoenix. So
Right.
why, like, I'm in Cincinnati. Why is a much nicer apartment and a much more in demand MSA going for less than the Midwest? It's because they're overbuilt. So right now in Phoenix, there's a 4,000 unit surplus of apartments, Class A apartments, right? But it gets better. The pipeline of number of units under construction, not permitted, not entitled, but actually under construction is another
Actively.
16,000 units. So they're going to have another 20,000 units as a surplus. So that's apartment investing in a nutshell. The problem
Wow.
is the barriers to entry to get into apartment investing is almost non-existent. There's plenty of investors that are willing to put money into these syndications. Fannie
Hmm.
and Freddie do the loans. So you have government agencies happy to do these crazy loans. And there's people that go to a boot camp or a mastermind, and all of a sudden they start taking down these big deals. So
Hmm.
it's gotten overly competitive. There's
Hmm.
no reason anybody new should look at investing in apartments unless they're going to do it in their own backyard in a specific niche, maybe 30 to 50 units, and heavy value add, meaning it
Hmm.
needs a lot of work, right? Because
Right.
anything that's turnkey is just overpriced and people are still overbidding on these properties.
Yeah, that's a great, really good point here. Another interesting aspect of commercial real estate investing is if you choose to invest out of state, you're also opening up your opportunities to the possible economic upturn in those areas as well. If you look at Tesla, when they moved to Austin, a bunch of other companies followed, and the real estate prices, not just the the commercial real estate, but homes, they skyrocket, right? And of course, that will attract a lot of national tenants that want to come because people who have tech jobs there can have higher income and they can have more disposable income. So how important is it for you to understand the economics of really where you invest? And you invest out of state.
Yeah, so we have investments throughout the Midwest and Southeast,
Hmm.
as low as Georgia, but not in Florida. I don't particularly care to invest in those areas that have had parabolic rises. I'd
Okay.
rather stay in boring Midwest, Southeast markets. If I can find something in a booming market, great. But the demographics that we look at most are traffic count, household income,
Hmm.
right? I don't,
Okay.
job growth is certainly a benefit, but that usually falls hand in hand with population growth.
Hmm. Yeah,
So
absolutely.
our metrics are very simple. And then our primary metric is cash on cash return and value
Hmm.
add. That's it.
Perfect.
So we have a mastermind where I teach this to other people, and when they submit a pro forma to me for me to look at, all I care about is not the upside. I don't care if it's fully leased, how much money is it going to make. When they submit the spreadsheet to me, all I want to see is how much more vacancy can this property handle? How much of a rent decline can it handle?
Hmm.
If later on you want to look at the rosy numbers, where hey, if this is fully leased, I can make this much money. Great. I first care about the downside protection, right? Let's do a risk analysis and see how much pain can this property endure. And to your
Hmm.
point, a single tenant property, it's it's a zero sum game. It can't endure any pain. If the tenant
Hmm.
leaves, you're done.
Yeah. Well, I think we covered some really interesting perspectives here on commercial real estate. I think that there are some major differences between really the non-residential side and the commercial side, right? So I would say, or the residential commercial side. So what I would like to do is really shift this conversation to a little bit more about you and you on the personal side. So when you were in that IT job, I'm curious, did you know you didn't want to do this long term right away?
Yeah, man, the corporate politics. So I was the youngest person to be promoted at every level of promotion that I got, and it was a battle, right? It was just you're too young. We can't have you managing people that are two, three times your age. And that was like a nonsense answer. I'm better. I work harder. Why shouldn't I get promoted? So, like, that was part of the corporate politics, right? But I also knew that what's the end game? You stay there and retire at 60 and you have a pension, and then what, right? Like, that wasn't enough. Plus, I also didn't love waking up every morning and going to work, right? It wasn't like, "Oh, can't wait to go to work tomorrow." But you know, the problem is in the corporate world, people are, they lie to themselves, right? They're disillusioned because I can't tell you how many times I told people, man, I love my job. And
Mhm,
in my early 20s, everyone said that, man, I love this job, love this company. It's all
mhm.
nonsense. You don't love it. And here's what,
It's
if you ever,
comfortable.
well, if you ever hear somebody say, I love my job, okay, ask them this. If you won the lottery, would you go back to work for free because you love it? So, no, you don't love it. It's a necessary evil. You can tolerate
Yeah.
it, like you said, right? Um, so anybody that's stuck, that's a bad place to be. There's always options, right? Start a business with nothing. You don't need money to start a business. Don't,
Mhm.
all these social media influencers that are now telling you to buy businesses. That's the dumbest thing out there right now.
Okay.
Most people should not buy a business, right? And the problem is, you know, these superstars that are talking about buying businesses. Here's the problem: none of them have ever talked about an exit. It's always, yeah, I bought this auto shop, I bought this HVAC company. They've never said I sold it for 5x what I bought it for,
Exactly.
right? So that's one problem. The other problem is they never talk about the challenges because they're there to sell something. They're there to sell
Mhm.
programs and coaching. So Do you know how hard it is to hire one employee? The amount of background checks, compliance, workers' comp, the tax structure that changes, withholding, it's a tremendous amount of work hiring an employee,
Hmm.
right?
Exactly.
And they
So
never talk about
scalability,
that.
and that's what hurts scalability as well. I mean, if their intentions to grow. So the other aspect of really this is you could blink and years can pass by very quickly. But for you, how did you really understand and take the action required to really get out of this situation? Because most people will lie to themselves.
Yeah. Well, so years ago, probably in my mid 20s, I was working in the corporate world. I started a marketing company and it was doing well enough to where I can quit my job. I was making more
Hmm.
money on that than I was my job. So, this is really stupid, but I went out for a buddy's birthday party middle of the week and we got like obliterated. And that night I decided I'm going to quit my job tomorrow. I'm making enough money, hate going to work. And next day, I sleep in till noon and wear shorts and a Hawaiian shirt to work in February. I had this giant water bottle because I was so dehydrated and hungover. Walked into my boss's office and like my coworkers are looking at me like I lost my mind. Walking to my this is again really stupid, but I walk into my boss's office and I'm like, "Hey man, I got to give you my 2 week notice." And he's like, "What?" He's like, "Can I talk you out of it?" I'm like, "No." He sits me down. He closes the curtains so that nobody could see how I was dressed. And long story short, I walked out of there with a promotion, an assistant, an office, and I took it. I sold out, right? And the reason was I thought I was doing it for the money. And I was working essentially two jobs, one my side hustle, one the corporate.
Hmm.
I had no free time. I had plenty of money coming in, but I wasn't doing anything with it. So at that point, I realized the money didn't motivate me. So I'm like, you know what? Why not just go back, enjoy my life, do the corporate thing? And that only lasted 6 months till I started another side hustle. But I realized it wasn't the money that motivated me. It was actually the freedom of not having
Yeah,
to go to work.
yeah, yeah.
So anybody that makes big decisions based on money, you're going to fail. If you start a business because you think it makes money and you're not passionate about it, you're going to fail.
Hmm. So what is the reason why you think most people are not capable of taking that risk, kind of belief?
Yeah, it's fear, lack of knowledge, and maybe they don't have any precedents. They don't know anyone else that's done that. They don't know
Hmm.
any entrepreneurs. All they know are people who've had great jobs, right? So they have just no sense of community, no mentors. But there's no excuse today with all the social media stuff out there. I mean, you can look, people call me on LinkedIn and I'll take their calls, right?
Yeah.
But you can literally call anybody. And if you're respectful and willing to add value, people will give you their time. Key to that,
Hmm.
though, is I've had a lot of people call me and all they want to do is pick my brain. That's fine. I'll give them some time. The people that I will really give a lot of time to are the ones that say, "How can I add value to you? What can I do for you? How do I
Hmm.
return this favor?" Or this is another like prerequisite. Don't ever call me without doing some research. I've had people call me and I'm like, "Hey, tell me the reason for your call." "Well, yeah, I just figured you're in real estate and we can pick each other's brains." I'm like, "What do you know about me?" "Well, I like to just know people naturally." Okay, wrong. Do some research. Get on LinkedIn.
There's
Like it
no
takes
reason for
5
the
minutes.
call then, right? There's
Right.
no reason
Yeah.
for the call if they don't do the research.
Yeah. I'm very Googleable. So spend 5 minutes and learn a couple things about me. That's it.
Yeah,
Very simple. And
yeah,
I will respect the hell out of that and I'll do whatever I can to help you.
I love that. So what is something about you that you, and this will be the last question about you. What is something about you that you wish more people knew about?
Oh, nothing. I don't know that people need to know more about me.
Hmm.
Um, I'm not out there trying to tell people about me. You know what I mean?
Okay. Yeah, yeah, yeah. Okay.
I love giving back. I love seeing other people come up, but I'm not here to promote me.
Okay, sure, sure, sure. Awesome. Well, what I'll do now is concisely share a quick perspective regarding health and fitness, and then we'll go ahead and conclude the podcast with Ash's plans for this year, whether that be on the professional side or the personal side. So the main perspective I really want to share today on the health and fitness side is really about making it time efficient. As you know, Ash, a lot of my viewers are entrepreneurs and executives. So how can you really make an approach like this time efficient? The problem we see is that a lot of people are focusing on a location dependent approach. What is that? It's going to the gym, it's going to a studio. But when you're taking calls all day, when you're traveling for work, and when you're essentially taking these meetings, you don't have the same capacities as most people do have to be going to these location dependent approaches. So the idea is, can you make it location independent as opposed to location dependent? Because with the location independent approach, it can actually adapt to your schedule. And if you have an unpredictable schedule and you have something that is not, you kind of set things in place, that's going to make it far more harder to actually adhere to that traditional process. So with a location independent approach, I would specifically recommend leveraging something like step count, because you can do that while you're listening to our podcast right now. You can do that while you're traveling. And as long as there's ground underneath you, you can basically do this specific approach. So you'll still be doing the same amount of movement, but you're doing it in a manner that actually adapts to your schedule as opposed to you making time for it. And that's the kind of idea behind this. And this is exactly what I actually personally use to lose over 70 pounds and actually keep it off. So hopefully that provides a different perspective and isn't as traditionally the same thing that you're hearing over and over again. So that's the main perspective I want to share today regarding health and fitness. So what we'll do now is go ahead and shift this conversation to Ash's plans for this year.
Yeah, great perspective, by the way. So here is the one of the greatest opportunities of our lifetime in commercial real estate. It's office. It's the
Mhm.
most toxic and hated asset class out there. But let's talk about it. What caused the decline of office? It was COVID and work from home, right? When the states issued their lockdown orders, employers had to just scramble within days to accommodate a remote workforce. And a lot of CEOs were apprehensive. A lot of them were totally against remote work, but they were forced to adapt. And to their surprise, when the metrics came out, on average, each worker that was working from home was 3 hours more productive than their counterparts in the office. So now
Mhm.
you have these CEOs saying, okay, wait a minute, my workforce is more productive and I don't have to pay this expensive office lease. When it expires, we're going to downsize or we're just going to go completely remote. Now, let's fast forward 6 years post COVID, and the latest metrics are not 3 hours more productive per week. They're 4 hours less productive because we all learn how to game the system, right?
Mhm.
People that work from home, man, listen, they're drinking at the bars, having 2 hour lunches, walking their dogs, playing with their kids. If their spouse is working from home, there's no productivity whatsoever. So we've all learned how to game the system, right? So now the work from home experiment has failed and people are coming
Mhm.
back to the office. So
Mhm.
because of that, office is so beaten down, but the bottom has already hit. Now it's on its way back up. You can find trophy buildings that were unattainable for most people for decades. Now you're buying them for pennies on the dollar. There's been
Right, right.
historic sales of the most iconic office towers in multiple cities go for 20 cents on the dollar.
Excellent.
And for your
And
audience, sorry, it doesn't have to be a $20 million office purchase. Look at a three, four, $500,000 office building. They will cash flow.
mhm, yeah. And one quick question here is as well, I think with Office, do you think it's actually advantageous to focus on repurposing them, or do you think the normal demand will come back?
Yeah, repurposing I think is the wrong way to go unless you're in
Okay.
New York, Miami. Um, it's too expensive. There's a lot of waste, and there's easier ways to make money. Find an
Mhm.
existing cash flowing office building with a high vacancy, but it's already cash flowing on day one. Let's go.
Awesome. Well, where do people learn more about you, Ash, and the work you're doing?
Yeah, go to investbeyondmultifamily.com.
Okay.
Ash Patel, Cincinnati on LinkedIn. I answer all my own emails and social media messages. I'm not hard to find. Ash Patel Real Estate. Just Google me.
Awesome. Well, Ash, it was a pleasure to have you on the podcast, and I'm glad to hear your perspectives today. This was Aryan Mohindra.